Good. So let me get started. So welcome to TakeStock Live. We're getting sorted here. My office here in Arizona is getting worked on. We have these windows here you can't see, but they're basically redoing. We have like 4,000, almost 5,000 square feet. So on the other side of the offices, they're like drilling, taking windows off. So I'm in a different office, so the background looks a little funny. So we're making do with this. So that being said, we're going to be starting TakeStock Live today. This is my first time leading it. I've got one of my good friends, and I'll introduce him in a second, who's going to be on with us today. So before I start, all of this is educational purposes only. None of this is investment advice. And we'll kind of get started today. Let me kind of introduce Bryan. You can see him on the camera here. So Bryan and I met 5 years ago. So I'll give you guys a quick background. So I had an old education company. I had a radio show in Arizona. And what happened was I had somebody call in and say, hey, we want you to come speak at this options investing group. So I went down to Tempe, Arizona. I spoke. He came and spoke to me afterwards, said, he had been struggling trading options. He was trying to figure out how it all worked. We just kind of hit it off, and I'll kind of let him tell this story. Fast forward, he signed up. I was teaching him. We kind of worked outside of that together. He became one of my instructors with the prior company I had. So he was teaching as well. We've traveled the world together, him and his wife and his kids. And yeah, he's been like one of my best friends now. So I decided today to bring him on to kind of go through and discuss. So welcome.
Thank you, Dan. Looking forward to talking about the market. And yes, it's been a fun ride the past 5 years, almost 6, I think now. So it's been a good time, man. And excited to see what's next.
Yeah, the time has been flying, man, for sure. I think it's like, I can't believe 2020 is almost already over. So that's interesting to see.
Yep.
I talked about you a lot so Stock Abilities to do a company. Obviously, you've been around everything I've been doing. I was kind of talking to them about you in the group, as well as other students, talking about struggles people face, didn't face, etc. So one of the things I want to start with is when you started, how long do you think it took you to get to the point where it started to make sense when I was teaching you?
Anywhere between about 6 to 10 months. And I think that when we started off, I was doing it more like, I kind of want to do this, but don't know if it'll work. So I tried it out. Where I started to see the most gains is when I really put my effort and focus into understanding the ebbs and flows of the market. And when I did that, then it was literally in about 3 months, right? But the first, I would say 3 to 6 months was me kind of just listening more so than doing anything. And I'd place a trade here or there, and I'd win every once in a while, lose every once in a while, but wasn't really focused on why I was winning, what I was doing when I was entering. I was just kind of like following more than like understanding.
Yeah, that makes sense. So I kind of told him that too, that it probably took you like month 8 is when it kind of hit, right?
Yep. Around month 8, right? It really depended on me putting myself in a position where I was paying attention. I think that before I wanted it just to be kind of like a get rich quick scheme, right? Where it's like, okay, I can put some positions on and let them go. And I think that now I do that a lot with alerts and things of that nature. But at the beginning, I was trying to do that without understanding why I was doing it, what was actually happening, where there was support and resistance, where people were accepting price and where price action was going to go based on either acceptance of price or rejection of price. So now I'm doing more and more of understanding where price is flowing, and that's helped me to get, more profitable in my trading.
Yeah, sorry. No, again, so sorry if I'm looking away. It's because, like I was telling you guys, they're working on the office. So I had no other office. I'm one of the guys here from. I have another project that I'm working on. This golf company I've told some of you about, and we're just kind of getting everything sorted. So it's kind of a mess right now. But yeah, I think it took a while for sure. One of the things I want to talk about too is nobody believed this. But when you started trading, I mean, you work so much in the consulting space that you honestly only really traded off your phone until really this year.
Yeah.
I mean, seriously, no joke. Like legitimately, all you would do is place trades off your phones.
Yeah.
So I want you to talk about the alerts thing, because every time I teach that in classes, I always say, look, it's not a sexy topic to discuss. Like, oh, you got to set price alerts, but go in depth on that and explain to them who are people are watching why that matters, because you were able to do it off your phone. And I'm not going to disclose like what you did P&L wise. I think it's personal, but like,
Yeah.
you get some crazy numbers and legit.
Yeah.
I know it sounds like cheesy because it's off your phone, but legitimately it was off your phone.
Yeah. So my day is I work with in consulting. I work with teams in India and in Belarus, Russia, different places. So a lot of times my hours are a little bit weird, and I'm up early in the morning on meetings, and I can't really just focus on the screen of like just looking at what's going up and down. So what I did was I'm opening up the app on my phone so that you guys can see. So I have Thinkorswim, and then I also have some accounts within Fidelity and Charles Schwab, but primarily I would do my charting with Thinkorswim. And I had to invest in a note, right? So that I could actually use my pen here to be able to actually like chart. So sometimes during meetings, I would, be listening in, and I'd do a quick chart on something, and then I'd set some alerts and say, okay, once this happens, send this out to me, send this alert to my phone and a text message. And what I would do with those alerts is I put a note in. And normally I would make those alerts on nights and on the weekends, right? So Dan and the rest of the group that we were working with on Sundays, we'd get together, look at the charts, and talk about where do we see support and resistance in the market, right? In the indexes, and then in some of the specific stocks that we wanted to do. From there, I'd place some alerts, and I'd say, if we hit here, watch for reaction, or watch for break down to X amount of dollars, right? So once I started to understand the price action and where we have those breaks and those ebb and flows in the market, I would put those alerts in on Sundays, or sometimes even in the middle of the week at night. And then the next day I'd be in a meeting somewhere else, and I'd get an alert. Hey, this just happened. So I could quickly go in and send in my order for whatever I wanted my risk to be. And I already had an additional alert on, okay, if it goes here, this is where I expect to get out. And if it goes down to here, this is where I expect to get out. Yeah. So the thought process was having a plan which would limit my necessity to sit at my phone and be like, should I sell now? Should I buy now? Or anything like that. Because that was too much for me, right? I didn't have enough time to be able to do that. I wanted it to be very simple, of kind of step 1, step 2, step 3. Given the stock hits this price, then I will enter this, this specific trade. When it does this, then I exit this trade, right? Either for a loss or a gain. And, that's how I did it. And literally I'd be in the middle of meetings, and sometimes I would miss an alert or two because I was in the middle of talking or doing giving a specific conversation, but at least my alerts came out. What I didn't do, and what I've started to do a little bit more now, as I put in my positions, and with the volatility that we're seeing in the market right now, when I started, there wasn't as much volatility, to be honest with you. So I wasn't putting in stops. And my options, I went in and I had the alerts, and I knew that if I was willing to put that trade on, potentially I could lose all of it because I didn't have a stop in there. I did have alerts, but if I'm on a call, I tried to stay away from weekly options. But if I was in a weekly option, then I knew that there was a potential that I could lose a significant amount of the trade. So I've adjusted that more recently, I would say probably in the last year and a half, I started to add stops into those trades instead of just using the alerts. Do they always work? No, but at least now I can focus on other things when I'm focused on those. And if the alert hits, if the stop's already in, at least it also goes with the order.
Yeah, no, for sure. I think so you said a lot there as far as, so let's talk about like Sunday preparation. So it's something like, we had our group for a long time.
Yeah.
That's what like made a difference. And I kind of was telling them when I was at the fund, which I'm at now, which is switched to something else, but on Sundays we'd have our call to figure what we're doing for the week. So I couldn't stress that enough. And I think for sure, like in the retail space, what happens is people, like I see with my friends, right? So like my buddy owns Cafe Monarch here in Arizona.
Mm-hmm.
And everybody had like, if you're not like interested in trading, they just want to buy things. Like you wanted to buy that Zoom IPO
Yeah.
Snow IPO this week, right? So
Yeah.
like,
Snowflake.
I gotta get the Snow IPO. I want to buy this. And I'm like, look, man, it's like, there's no like rhyme or reason. It's just kind of like this like real jittery approach to trading.
Yeah.
That's why a lot of people fail. Let me close this door. It might get loud. So, but that Sunday plan makes sense. So when you were trading off your phone, you had alerts, you had stops, you had targets, and something I still teach. And I think it's like an important thing for people that are trading to have, because for you, I mean, you're always just on the phone trading. You had some, like I said, crazy P&L months, like
Yeah.
stuff. So
yeah, I had a couple $20,000 month in profits. Had quite a few, $5,000 months, and had quite a few $5,000 days. So.
But it all makes sense because look, if you had targets and you were on your phone, you're not sitting there watching. You just know, look, it gets there. There's no second guessing. So if I'm wrong in the trade, I'm taking the loss.
Yep.
If I'm right on the trade, it gets to it, I'm out of it. So all this stuff is predetermined.
Yeah.
So it takes out the emotion of a lot of this stuff in the world of trading. Now, it's different when you're buying shares, right? Like when you buy shares, like you're not necessarily watching.
It's longer term.
Yeah,
Yep.
you just leave it alone. But what we're doing with equity options trading is like 1 to 30-day positions where you're putting money in to generate income or cash flow, so to speak. So you have to be a little more like surgical with your entries and exits. So
yep.
that does
so
for sure.
What I can do is, for example, I can't share my screen, but if I could
probably get it to you. 1 second, let me see.
Let's see if you can get me, because like I'll just look at ES real quick, right? Just a quick conversation around ES and where we're at right now.
If you can share now.
Yes, I can. So let me get ES's chart up here. So
and then I'm going to plug in this.
Just looking. Yeah, no worries. Just looking at ES here really quick, off of where we're at. I have some levels that I'm interested in knowing how we react, right? Off of the 618 of the fib, I can see right here, we've already, stayed below that 618. Now my next target is right down here where we've seen some resistance. This is 917 yesterday. We saw some support up here. We saw some support back on 911. We saw some support back on 99, and all the way back over here, we can see back in 86. So this number right here, 3315 for ES. I'm ready, waiting for this to break, right? As soon as this breaks, or if we touch it, and I'm going to watch the reaction here. If we break this, then we have another move down to 3,300 fairly quickly.
Yeah.
And again, then the next one, then the next one, then the next one. But these are all things that I'm waiting for it to happen. And I look at these. This is now, a couple months in that I've been looking at these. But these are the points of support and resistance that I'm using to evaluate my trade. Right now, we're in a range. There's not much to do. If you didn't catch the short up here on the 16th, this Monday, then you kind of shouldn't be in any trade right now, or trying to get into any trade right now, unless we break one of these areas. I'm not going to put on a new trade on Friday waiting for the weekend to see if potentially we go up or down. Who knows what the heck's going to happen. So right now, I'm just waiting.
Probably listening to you right now, and they're like, it's me, Junior, because everything you're saying is like everything I keep saying.
Yeah. So
it's funny listening to you talk about this stuff, because you're like, I'm not going to put a trade on Friday until the weekend, which I don't do. Actually, I lied. I put on two lot IWM short today, but I was already net short market.
Yep. Yeah.
And so, but it's funny you say this, but you're like, hey, I'm going to wait for this level to break. So like, I literally teach the same concept. So.
And I will tell you, this morning I got in on a weekly, and I got in at 60 cents for 32 $332 SPYs, because I figured we would break, and they went up to 90, and I sold them. Right. So I wasn't trying to make a whole bunch of money or anything like that, but I figured if we were gonna break lower, I'll just go to 332. They went to 332, and I was out. Right.
Wait, so talk about this though. So talk about, because one of the things I've been introducing to like the new group at Stockability is like when you make a discretionary trade where it's like going to be a 1 day or 1 hour or 2 hour trade.
Yep.
Versus when like we can figure out when we can get like a 200-point S&P move, or
Yeah.
like 20 or 30 points on Apple. Like how do I want to hear it in like your terms, like from what I taught you and what you've like developed on your own.
Yeah.
When do
So
you determine what that is?
I'll talk about like when we were at the top up here a few weeks back, right? So we had been talking, just you and I and other people, anyone that I talked to is all like, man, this is crazy. We've got to have a pullback at some point, right? I was watching VIX, and VIX was getting into the teens, so VX. And as it got into the teens, you started to see some movement down there, some buying and some support for VIX to not go lower. So as we started this sell off this first day, at this point, when we ate up the 9.2 on 9.3, at that point, I got heavy short, right? Why? Is because I knew that yesterday's low hit, and if we're past yesterday's low and we're still going, we have at least one of the things that I've been doing that I don't know if you touch on at all, but I look at the range, and then if it's a heavy move, I double that range. So at this point, the range here was from 35.87, 35.80 to 35.30, right? So there's got to be at least another 50 points in this move, so I can get short down to 35 from 35.50 or 35.30, and I can get short down to 34.80, right? And that's where we went, literally, right? So
this is real important. So I just want to say, like, so anybody from Stockability, if you're not, or even if you're not like already enrolled and you're just watching this in general terms. So one of the things that like I've taught, and like it's good to see you like running through this, is like for any of you play golf, when you're trying to measure a shot, you try to figure out what the distance is. So if you can figure out what the distance is, you know what club you're going to hit. So what he's basically saying, if you're not getting it, is before he puts on a trade, he's trying to determine, in theory, where price could head to. But he's not just making up an arbitrary number like, oh, like, Apple will go to 120.50 just because like you just pulled it out of thin air. He's looking at price charts and determining based on a few things where it could go. And then based on that, he'll explain the next part of what he does. So
exactly. So when 330 came up and it started to hit, we continue to have some continued movement. Then you can get in at 334, 348 for SPY, or if you're doing SPX, you can look at somewhere between like 34.90, and you knew that that's the kind of that max pain, the max move that we should see at least, based on the selling and based on taking out yesterday's low. Now we would have some resistance here at 34.92, and we could blow past that. But that was what I was looking for. So that's where you get that max amount of profit. Yeah. So really, as I look at positions, my focus is normally at least 2 weeks out. I try to stay away from the weekly options. But in cases like this, where we were having like a bloodbath, I will tell you, I got out of my shorts on the 3rd, and then I was kind of pissed off that it continued so far down. and we talked about that, right? But at that point, I made my money and I was okay. I made my week. I made most of my month during this day. So I wish I would have kept my shorts to go a little further, because we had, and this is another thing that I guess we could talk about, is because we had seen such a continued path up, I wasn't super short heavy either. And I was cautious here, even as I entered this. I entered a full position, but I didn't go like 100% full leverage with every single thing in my account.
That's important too. So look, let me tap into that, because that goes into, again, something you and I discussed, like, even like off record, outside of classes when we first met, is like you determine when like it's quarter size, half size, full size position into trade. So you've got to figure out when you're swinging for the fence on a position, or when you just know, like, hey, I've got to put quarter risk on, and that makes a big difference in a lot of things. So like you said, you made your month. So when I talk about this too, is people that over trade, like you and I, like we talk about it, like there's days like I look at the market, like I don't want to do anything today because there's just I can look and see like there might be a scenario that plays out, and if it's not a scenario that I think is like super profitable, I'd rather just wait for that to happen and then like load up and then try to like hit it out of the park, which I think is what you do too. So
Yep. And so like, for example, on and when we talk about like loading up, it's still not 100% of your account, right? So if you're out there and you're listening, don't go 100%, don't go full on, not worth it. I would say that at the beginning, I thought it was just going 100% full account when I was like full on, and I realized that I always want to be able to live to fight another day, and I always want to live to be able to trade another day. So as I look at all of this, when I say I'm going like 100% of my risk accepted, you know, I try to keep my account at no more than 50% allocated in risk outside, like on a trade, outside of not one trade, but everything.
Like let's say you have $100,000 in this. You're saying at any given time, like your true like risk is 50 grand worth of capital outlay.
That's what I do my best at, right? There's some times where I break that rule, and you know we're looking at 75%, and I'm like, okay, but again, that's because I'm seeing this move happen, like, and I know I'm confident that it'll happen, and I'm also very, very tight with my stops when I do that, right? So, and what I mean by that is, I'm not willing to let it fluctuate 25% like I would on a normal size position, right? So, as I put a position on, if it's full size, which you know, whatever the size of your account is full size, I'm saying I'm willing to see it go down up to about 25 to at times. If I know it's longer term, I'm willing to have it go 50% down, right? But at 50%, I'm cutting for sure, and most of the time at 25%, I'm cutting. And
why is that? Like, why would you cut at 25 versus 50?
So what I do is, let's say, for example, I have my full size is a 6 lot, right? Let's say I want to do 6 contracts on something. That's my full size. What I mean by cutting it is I'll take out at 25% loss. If I feel like, you know what, maybe this move isn't going to happen, I may take out 50% of that. I may sell 3 of my lots.
Right. So yeah, good. Okay.
Just to be able to ensure that, you know what, I don't want to, if I'm full size, I don't want to take a full 50% loss on this.
Yeah.
I'd rather take like, you know, a 35% loss when you look at everything else, because I sold half of it in the middle.
Yeah.
Than the full, you know, 50%. So what I would do is, if I see I'm getting down between 25% loss, I'll cut out 3 of those contracts that I have in options, and then I'll wait with the other 3. And if those get to 50, then I'll cut those as well. Right. And then I'll just wait for another entry into the position.
Yeah. So that's something I talk about too. And I think that's, look, so I was talking to one of our students. She said something like, let me try to explain this concept, because, you know, like, and we'll get into some more concepts. You know, when like you're teaching, at least for me, like I would teach you what I thought you guys needed to know, but then you guys would ask questions. I'm like, oh, I didn't even think to teach you that, because you had it in your mind. Like, what is, like, how do I do a certain thing? So one of the things that she brought up was, there's always this idea, like if I get into a trade and I take a stop out, it's like I can't re-get into that trade.
Yeah.
So what I was trying to explain is like, oh, look, there's situations where like you're testing a level and like you put risk on, right? And you're like, you're trying to get it to work. It doesn't work. So like maybe you're long 10 lots and like you reduce risk by like 6, 7. You're like, you know what? I just don't like it. And then it starts to work in your direction. Then you like re-add that risk and you get up to full size again. So I think that's important to do. And it's something that I'm glad you adapted into that too, because I do that.
Yeah.
If it doesn't work, I'll reduce, or I'll just take the loss and then I'll re-enter.
Yep.
You've got to be agile, right? So
yeah, you got to be able to kind of move around and not. I try not to marry myself to any position, because the market will do whatever it needs to do.
Right. Yeah.
I use as much information as I can to be able to understand the trend, and I do my best to not try and fight the trend.
Yeah.
With that being said, I do hedge, and what I mean by that is I try and keep my large portfolio, whatever whatever my larger portfolio is, I try and keep it balanced for longs and shorts, right?
Yeah.
So if I have 10 different positions that are short, I may go and look for a leveraged index that is long for one of the indexes, to be able to then just balance out. I know that I may be biased short because of what the market is telling me, but then I protect myself to not have as much of a loss when I use one of those leveraged indexes, right?
Yep.
So those are some of the things that I try and do to be able to mitigate some of that. But as I'm looking at my positions, right, and then again, as soon as I hit, like, if I'm full size on my position, as soon as I hit like anywhere between 50 and 75%, I'm normally taking off one or two of the contracts.
Yeah.
And then as soon as I hit 100%, I'm making sure that I'm below 50% of what I had risked, so that then pretty much I cover the rest of the trade, right? So that the rest of it that I leave running is now just kind of house money, right?
Yeah.
And then anything that, if it goes up or down, I'm not hurt as much because I know that it didn't really cost me anything. And then what I try and do then, if let's say I have 6 contracts, I get to 100%. By the time I get to 100%, I will have traded, like, once we get to 50 to 75, depending on how the move's looking, I'll let go of 1 or 2 lots, get some of my money and my risk out of there. And then whenever that option price goes to 100%, then I sell and make sure at least if I have 6 lots, I make sure that I have no more than 3 whenever we get to 100. With those last 3, right, I put stops in at 50% for one of them. I put another stop in at 75% for the other, and then I put another stop in at 90%, and I let them run.
Yeah. The runner idea.
Exactly. So that, and I don't put limits on them, right?
So
I'm not limiting.
Remember when Priceline used to be like the stock to trade back in the day?
What was that?
Remember when Priceline used to be the stock?
Oh yeah, dude, I remember Priceline was sick.
I was telling him, I was like, look, I used to be able to trade that thing. I used to buy like 20, 30 Delta options on this thing.
Dude, it was crazy.
Like $3,000-$4,000 a contract. So it was such an easy concept. So those of you who never traded Priceline, so Priceline, you're not going to get a lot of day traders trading that stock because it was like, I don't know, it's 1,000. What's it at now? BKNG.
It's
1,000.
It's ridiculous.
So you're not going to get a lot of like retail flow in this thing to trade. So it's normally like institutional flow. So whenever you get like a sweep coming through on it, like these market makers would hedge with it, and they're the one buying equity. So it's easy to figure out when like institutional flow would come through on this.
Yep.
You could be able to run like a 20, 30 Delta option. So I was trying to explain to him that used to be my favorite stock to trade, but it really has not been that super great as a. I haven't traded it all year long. Like
I haven't touched it, dude. I haven't touched it in a while. Primarily because their options are not well priced, but that's a whole other conversation.
Look, the spreads have always been wide on it, but yeah, it's kind of got messed up. So
yeah, and I mean, yeah, there's a lot to this. We could talk about it for a while, but in all reality, the options are just not well priced. They're too wide, and I don't. Me personally, I'm really cheap when I try and get into my options. So like when I'm going in and I'm looking at an option that I'm going to buy, I'm not buying at the bid price unless the move is already happening. And if the move is already happening, then I probably shouldn't be making the trade anyway, right? So I try my best to never buy at the bid. At the ask price, I get as close as I can to the bid.
Yeah. So let me transition for a second. So recently, so how obviously we talk about like price action being important. So recently you got into futures trading, had a little bit of struggle at first, actually picked it up, was crushing it.
Yep.
But a lot of the same price levels apply to that, and the same kind of like principles of management still apply, right?
Yes. So the cool thing about futures that I like is the levels are shorter term. So like I look at shorter term levels, like 4-hour levels. I look at daily levels, and then the hourly levels. So as they break, especially now that I'm like at home and I can work from home, early in the morning, the European session, things like that. This 4-hour candle is sick, dude. Sorry. But you look at these four.
Let's go back to that. Sorry, the degenerate in me has to see this.
Dude.
That does look good. Wait. Can we pull up an Apple chart? Because I don't have charts up.
Yeah, let me pull up Apple. So right now, as soon as this breaks, this 4-hour wick here, I mean, we've got free reign down to 3,300.
Right?
16 points. 3,290. I wouldn't doubt us hitting this. This level 3,292 from 903. I think it is. When is this? Yeah. Okay. Let me look at Apple. Let's see where Apple's at. 107, $3 down. You were in the 105s, right, for next week? Damn, that's nice.
I have like 170. I'm in like, I have options like 30 days out, next week, 16 days. I spread it out.
Cool. So
I bought like really deep I bought like way deep in the money ones too.
Okay.
Like 117s.
And so, excuse me. Sorry.
No, it's fine. Take your time.
All right.
What do you got the voodoo fib on there? You're gonna confuse my stockability students.
I know. I'm not gonna. But
you're doing is adding work for me. They're gonna ask me what.
What the hell is he doing with these fibs? Don't worry about them. They're not important. I promise. So with Apple, right? You look at this weekly.
Yeah.
And I was explaining this to my friend Josian. You met him the other day. Yeah. We're from Puerto Rico, so we surf a lot, right? And when you surf, you're counting waves to figure out when is the next one that you can actually jump on, right? So here you can see this wave, it's forming, and then you see it kind of just create a little wave at the top, and then it crashes. And that was the wave that you could hit. Now that it crashed, found an area of a low, and it started to go up, then you can get on this wave for it to go up if you'd like, not a problem, right? Cool. At some point, this wave is going to topple. And that's what's happened so far with the rest of the stock market, right? The whole wave concept of if you're counting the waves and waiting for that next wave to come, and it happens on the weekly, it happens on the monthly, it happens on the hourly. We're just riding waves. And if you've ever surfed or ever tried to figure out anything in a marine situation out on the ocean, that's what we're looking at. Right now, we're about to fill this gap down to 106, 105, like you were saying, right?
Yeah.
So if we fill this gap and break, I mean, yeah, the next stop is.
But why aren't you short?
This week has been crazy, dude.
Sorry.
I didn't.
I'm like heavy short this, like heavy. So I was explaining it in our thing this week. I got pretty. So go back to talk about like when to press it, non-depressed. And this is an important topic for trading. Is like you're getting this wave down, and whether a lot of the JP Morgan put out a note that's rebalancing on markets, which I believe. I think there's a lot of rebalancing coming ahead of the election.
Yep.
So if you looked at another good indicator or data point was the insider selling from like people at companies, like they were selling shares. Huge, right? I sent you that data point yesterday.
Yep.
That's pretty big. So whenever you get like a feeling where you look at weekly candles and you see markets are going to have like a large move up or a large move lower, you have to try to exploit that move as much as you possibly can, because like for me, August was dead slow. Like that's not like my type of markets. I didn't really make a lot of coins. So right now I'm trying to like hit this thing so September I can just knock it out of the park, hopefully.
Yeah, it's going, dude.
So
that's
good. Go to the 15-minute on it real quick.
So what I will say is the other thing that's important about trading is make sure that you are mentally ready for it. So I can tell you right now why I'm not as short as I should be in regards to the market.
Yeah, for sure.
My mentality right now, I'm focusing more on some other things with my family, some of the things that Dan knows, just other personal things. So I haven't really pressed it as hard.
Yeah, when you're not in the mindset, it's hard. I always explain that too. It's like you've taken breaks from trading too. Like I haven't traded futures in probably 6-7 months. There's just times where like you're not focused, and if you're not focused, like you're just gonna blow money. So
and the other thing is this past week with the triple witching happening today, I just thought it was a good time for me to take a break and wait and see what happens.
That's
So
important.
I didn't.
How long do you think it took you to like get this idea that like you can just sit back and chill because there's always another trade coming around?
I would say it took me about 3 years, dude. Because
after or before we met? You can be honest.
I think after we met, man. And even there, and it's like an ebb and flow. At times there's this feeling like, man, let's just trade the next move. Let's trade the next move. And the other day you were at the house, and I was like, man, I want to show Dan some trades I'm making. So I made more trades than I normally would, right? But at the reality is, there's a lot of time where you just got to sit back and watch, and you just got to wait. You got to wait for your opportunity, wait for your time for it to be right. And if you're not there mentally, like I personally now I'm trying to do less and less of someone else's ideas and just trying to really see when I hear something, like when you threw out the apple, I'll look at it, and you know, I know we're in a point where we're looking at a downward trend even on NQ, right?
That's a good point to talk about. Is like, so when I taught you, like how long did it take you to stop like being like, hey, what should I ask you? What do you think about this? Because literally at this point in your career, literally now, like, I mean, you might ask me for once in a while.
Yeah.
We chat in our own little private thing, but like, you're never at like, hey, what should I do with this? Like, there's never like.
Yeah.
And like, and that's the point I'm trying to get. So if you're trading, once you, I don't want to call it like you're good, but once you get the confidence and you understand, like you've seen, like you bought the t-shirt, you've been around the blocks a few times, you don't necessarily need to like bounce ideas off anybody every more. Like obviously there's times where I ask you, I'm like, hey, what do you like?
Yeah.
If my feels off or like my confidence levels low, like I'll ask you or like Ophir, other guys I've traded with for years. What do you guys think about this? Just to get like your feedback to like,
yeah,
put me back in like, you know, my radar, or Zoom, so to speak.
I think I'll be 100% honest with you. It took me blowing 2 accounts.
Yeah.
and you know, not that I'm proud of that, but it took me blowing 2 accounts.
Relatively, like not too big. So don't. I don't want everybody to think he lost like 200 grand. Like
no, that's not. No. Like I have a method in which I do, and my accounts stay fairly small within the risk that I'm willing to do. So most good. So I'm like, okay, and it's not in all the accounts, but in each account, if I get to 20 in any given account, I'm willing to take more risk, and then I do some things that many times aren't very good. So I've learned that I keep my initial balance on the accounts for the quarter around like $5 grand. That's my approach. Not saying that everyone should follow it. And then depending on what I'm trying to trade. So the reason why I have multiple accounts is because I have accounts that are just cash accounts, and I have a few other accounts that are more that allow for margin, so allow for like spreads and other things like that. So yeah, everyone has to trade the way they need to. But when I blew a few of the accounts, after that I realized, and what I'll say is, right, I was looking for kind of that golden bullet. So even though I was working with Dan, I'm looking for other people's alerts and paying for some subscription over here or blah, 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 right? And after I blew a few accounts of trying to follow a number of different people, I was like, you know what? I kind of know what I'm doing now. I know how options work. I know the flow of it. I just need to kind of block out all the noise.
Yeah, I think for sure. I think like, so one of the things that I've told them, and I think you're seeing that too, is like once you get to a certain dollar amount, you start to get a little more like aggressive.
Ballsy.
Yeah. It's like, look, it's a personality. Everybody's personality is different. You and I have like a lot of similar personality traits when it comes to trading, because I get like that too, where like I'll get like a nasty run,
mm-hmm.
like trying to like push.
Yeah.
I'm
So I'm like, I'll double it. Let's go.
Yeah. So look, that happens, but like, you know, like in my IRA, like I'm always like pretty cautious. The one lot, or I always trade pretty small, but it's like on these smaller things, and I've always made it clear to a lot of this. I'm like, yeah, I'm gonna press this, you know. Got to be aware of like of it, you know. And I think like I hate to say it this way, but I think when we trade, like we mess around, you and I know, and I'll never teach this, but we mess around the weekly options and our like we put these small accounts together. Like I think when I put them together, and it sounds bad saying this, but I'm fully comfortable
losing all the money.
Yeah, like because it's not like, and I know it's going to come off bad, right? But it's like if it's like a 2, 3, 4, 5 grand account, and again, everybody's
different. Yeah,
right?
and again, it does sound horrible, but it's not that we're willing to. But the reality is,
we can press it and go crazy big with those accounts.
Yeah,
like some ridiculous amount of number.
Yeah,
I'm not going to lose 50 on it, but like if I get it to a certain number, like I'll press. But it's just like one. It's like let's call it our speculative account, right?
Yeah,
that's really what it is, right? And you know that going into it.
And so it's not about like here's what I'll say, right? It's not that we're just willing to lose it. It's just that we're confident that we can make that back up.
I was literally just going to say that next, 100%. I was just going to say, look, it's exactly not that. It's the fact that like you get to a point in your trading where you're like, yeah, I know like Netflix will have a move. So if I just sit back and do nothing and wait all month for a Netflix move, I can make whatever X amount of dollar on Netflix only.
Yep. Or on one of these QQQ moves, right? Like, you know, you can get in NASDAQ, QQQ, or SPY, right? And I literally, I'm working with my friend Jose. I'm teaching him how to do some of this stuff, and I'm like, you just focus on QQQ and SPY, and you use the NQ and ES, and think of it like you're back surfing in Puerto Rico, and you're watching the waves come in. When is the next wave going to hit? Oh, look, it looks like this wave. You know, on Monday when we were talking, he's like, man, it looks like that was the top of the swell. I was like, it probably is, right? And then look, it started to fade. And the reason why is because what he saw in QQQ and what you'll see in ES from the past few days is that we couldn't get past last week's, point of a high.
Yeah.
The swell. Right. I was like, it probably is, right? And then look, it started to fade. And the reason why is because what he saw. I'm hearing myself again.
Sorry. I was trying to see if there's any questions coming in, and I clicked the live. Go ahead.
Okay. So, I don't see any Q&As. No question.
Nobody wants to ask us questions. Maybe we're doing a good job of our discussion.
Or maybe nobody's listening. One of the two. I don't know.
I don't mind talking. We're talking markets anyway.
So yeah. So this is what he saw was he's like, oh, we didn't get over this last.
I can't see your screen's frozen if you're showing something else.
Oh, stop share. Let me see. New share. Okay. Can you see it now?
Can you hear me now?
Should be able to.
Still says Apple.
It's not interesting. Give me a moment. Let me
just try to stop share for a second.
Yeah, let me stop the share. Stop share and then stop share and then
there we go.
Share again.
We got about 10 minutes left. So let me just ask you a few other questions.
Okay.
Okay, so what would you say if somebody's new to options trading, what their first 6 months should look like, what they should expect?
First 6 months, they should expect some losses, and they should expect some situations where price goes in your favor and your contract doesn't increase, especially if you're just like doing it on your own, right? If you're following like alerts from Dan or anyone else, then what you should expect is that you're not going to win every single time. I can guarantee you 100% of the time, anywhere you go, you won't win 100% of the time. And one thing that I know you probably have already talked about, but like win ratio, I don't look at my win ratio. I actually looked at it a while ago because I was talking to someone from another chat, and they were like, oh, thank you for giving me this information. what's your win ratio?
Yeah.
I was like, I don't know. He's like, can you put your account in this place? I'm like, sure, I'll go ahead. And my win ratio was like 30%, right?
Yeah.
But my losses were very small and my wins were very large. So he was like, man, you don't really make a lot of winning trades. I'm like, yeah, but look at the P&L. He's like, holy shit.
Yeah.
You know
Yeah.
what I mean? And I
Yeah.
was like, I don't really care if I never go into any one of my options trades thinking this one's going to be the one that's going to hit it big. Um, I just go in with my targets, and then whatever it hits, like if it hits a stop. So for example, like on Apple, right? Your stop should be, you know, this high from overnight, like a
Well, I
111.
can't see it. So
Oh, okay. I don't know why.
no, no worries.
Um, but on Apple, right, my stop would be like the overnight high from yesterday to today.
Yeah, keep it.
100,
I agree. Your
111.90.
on you're like you like look, and I agree with you. So instead of taking the 50% L on it, like you're wrong if it breaks overnight high yesterday, so you might as well just get out of it anyway.
Yes,
Get back in.
exactly.
Like I don't know that I look, and that depends to the options positioning because I'm really deep in the money. I have like 117, so I've got to be like $10 in the money in these.
Oh yeah,
So
yeah.
they're not going to move as much because I was expecting. I honestly didn't expect us to sell like we did today. That because it was triple witch, whatever it is.
Yeah.
We were going to trade sideways, and I want to carry a swing on this. So I went deeper in the money on a lot of the positioning. But I agree with what you're saying. Yeah.
You know, so as you get in, the other thing you can expect is, you know, watch. You can expect to look at charts and then say, I think it's going to do this, and it do the opposite. And you can just expect that hopefully at the end of the day, you will learn how to get into the right position with the right number in regards to the strike price, and to know just about how much you want to get at the end of the day to get out of it.
Somebody said win ratio it only sounds good. It sounds like a sales pitch when people talk about win ratios. I agree. It is.
Yes. I don't talk about my win ratio because I really don't even look at it because I know a lot of I shoot shots and I'm not going for bullseye every single time, because the market at the same time, even though I'm looking at the waves and I assume them to do a certain thing, a lot of times it doesn't do what you assume.
I think people are obsessed with this idea of like getting a trade right. You know, it's like sort of the Big Short. You know, like I'm just going to use that because everybody's seen that movie.
Yep.
Where he's like he bought that. I think it was like CDS. Was it CDS?
I don't even know.
He bought like the insurance swaps he was buying.
Yeah.
Like, that was a trade that took forever to play out. So I think people when they put positions on, they want to see their idea like validated from the market. I could care less. It's like if I get into a futures, if I get short West Texas, and I've got like a dollar target, and it drops 40 cents in a matter of seconds. I'm not even going to sit for the dollar target. Like I'm bailing 40 cents in. So a lot of that's adjusted. I mean, so I think the win ratio is a big thing. So to recap it, you say 6 months, expect to lose money. It's a struggle. Don't worry about the win ratio.
And focus on understanding what strike price to get into.
That's
right. And then focus on slowly but surely learning how to exit right. And exiting right doesn't mean that you make the maximum amount on each contract, right? For example, I had an Amazon position where I had 4 contracts, very large position, and I sold it when I made my price target. That being said, it went up and it quadrupled in price.
Yeah.
Right. And could I have had a better exit and left when it quadrupled in price? Of course. But I'm okay with what I made. I made some pretty good money on that trade. And so the other thing is the first 6 months, don't focus on what could have, should have been. Focus on why you exited, why you entered. And, you know, if you're okay with that, then who cares what happened with the price afterwards, unless you're back in another position.
Yeah. Okay. So that makes sense for sure. So yeah, I think that's a good wrap on this. And I just want to tell everybody watching this, whether you're from Stockability or wherever you're from, you've got to expect it's like, look, this is real. It's viable. And I even have like a really good friend of mine. I'm not going to say his name, so I don't know if he's watching, but I taught him like 5 years ago, and he runs a pretty big like um, company here in Arizona, and he does pretty well. But he's like, man, you know what? He's like, he's trying to transition out. He might sell this thing, and he wants to slow down. He's like, I wonder if I could actually do this full time. Like, look, you're a smart guy. You're the CEO of this company. Of course you could. But he just like doesn't put commitment to it. Like he does it 1 week, but he's busy. It's not like it's a hobby for him. It's not a serious thing. I go, look, if you made this serious, you could obviously do it. So I think I would say to people learning to do this, it's if you put the work in it, obviously, it's like anything. It's hard to fail if you put work in. I mean, because I remember 8 months in, you came to me like, hey, look, I'm struggling, man. Like, it's not like clicking. So you and I would talk, and like we were trying to get you to a point where it started to click, and then it started to click, and you were like, so sometimes you just have to make adjustments. And I think what you said about options, like what strikes to pick too, that's important because you've got to what strike do you like, what strike do you not like.
Yep.
Are you comfortable? And I gave them in the new model. It's different from what I taught you guys. Where like I capped them like $1,500 max risk. Like you've bought like $3,000-$4,000 options before, right?
Yep.
It just depends on your risk and who you are. So I think that's important to understand as you go through that as well.
And the one key during those 8 months, right? I really started to then say every day I have at least an hour with charts and understanding the ebb and flow of the market. And then every weekend I would spend at least 5 hours trying to figure this stuff out, understanding movement, right? So I dedicated specific time. Like you said, if you're just going to do it as a hobby, then you can expect to get the returns that you would get with the hobby, right?
Yeah.
If you're going to make it something that you want it to be a continuous flow of income, you've got to put in the time and effort to understand what's really happening, just like with anything else.
Yeah, for sure. But you've been pretty good about compartmentalizing your time too. So I think that's important.
Yeah.
It goes back to like who you are. I mean, you're a consultant. You've done like a lot of professional coaching stuff to like help you in your career.
Yeah.
So we won't get into, but like the way that you would set alerts is a big testament to efficiency in trading. So that's really important because I remember like when I was in Spain 2 years ago with Haley and all them, and they were like, I always remember this when they go, hey, how do you know we were out? Like, hey, well, what about S&P? I was like, it has to do this to do this. And they go, how do you remember all this? It's just because like, I know that if certain levels break on like indices, I just know how to react to different things, right?
Yeah.
And I go, once you get to that point, it just makes the analysis that much more clear because it becomes simple. If S&P does this or NASDAQ does this, well, inherently, like these different equities are going to do this. And so it just becomes wash, rinse, repeat. It's when you get into a situation where like you don't recognize those scenarios occurring over and over, and you don't realize there's a method to all this madness, that like you're going to have issues. So you have to really dive into it and see, okay, look, I know this scenario. Like I know what to do when this happens. So it just becomes like reactionary.
Exactly. Yeah, 100%.
So any final thoughts to the students or anybody watching as far as trading goes?
I think for me, you can always make money trading, right? But
money in the banana stand.
Yeah, like you can do anything and make money, but if you want to do it consistently, take the time, right? Take the time to learn and take the time to work with people who know what they're doing. Dan is a great teacher. Everything that I learned has come from him, and then I've deviated in different ways, like with the voodoo stuff and a couple other things that I'm using now to be able to support the things that Dan taught me.
That's important too. Like I said, it's everybody. It's like, look, whoever you learn from in this, like, and you just said it's perfect example. Like, you would sit with me for days at the office and we would trade. But even if I do certain things, you have to like if I teach you to like make like pasta, you're going to adjust it to your own liking a little bit, but it's still the same base for the most part, right?
Exactly.
I think that's important for anybody watching is don't try to like replicate somebody exactly. So like, you're just not going to. Like, you have to like, because your account sizes are different, your personality, like your lifestyle, like you've got to be able to adjust it to fit your own personality. I think that's important to understand in trading. Don't try to like exactly mimic somebody because it's just not natural, right? So
no, yeah, I yeah. Everything that I do now is a derivative of what I learned from you, but at the same time, it's still a little bit different, right? I'm trading off of the same levels. I'm trading off of the same understanding and the stuff that you've taught me, but I've added in a few more things. I use like the market breadth of the amount of buyers versus sellers to help me see and continue with trend. I use some different things that are out there. So
I use market breadth report too. Whatever works, I mean, I look at a few things. I was looking at 10-year bonds yesterday to see my brother, he's pretty good at macro stuff. He's like, look at the 10-year, and I was looking at 10-year for an idea.
Yep. TXN.
Yeah. I think I posted. I was looking at that too. So
yep.
Yeah, I think that's it. I think there was good feedback. There wasn't a lot of questions. Everybody just said they're absorbing what we're talking about. I really wanted to bring you on to discuss, because obviously, I don't know. I think you've got to find a niche that you're good with, and you'll also have to adjust whatever you're learning to your own like capital accounts. And that's important too.
Yep.
But I think the biggest takeaways I would say are you basically sizing up a trade before it happens. That's really important. I really try to teach that a lot still. I haven't deviated from that at all. It's like, how do you size up the chart and what could occur? Because if you can figure that, you can figure out risk, you can figure out what options you're trading, you can figure out potential P&L. Like that one thing answers all these questions for you by just doing that before the trade.
Yeah.
So
you want to eliminate that emotional connection to anything. And you want to be able to just say, this is what it should do. And if it doesn't, then okay, I'm willing to take this loss. If it does, then I'm willing to take that money.
Of course. You have to do it on every single, and if you don't believe in that, it's hard to like understand that that'll actually happen. So you have to like buy into this idea that price action works the way it does. And if you don't, it's like, it's not going to work. So I think it's hard. So
one final tip that I got that I read somewhere: price goes back to the open about 70% of the time, right? So what I've been using that for is, as price starts to move in the morning, right, it normally comes back to the open at some point in the time during the day. So don't get too excited in the morning if you miss a move, because about 70 to 75% of the time, where the index started, and even in a stock, wherever it started for that day, it'll touch that price again at some point in time.
Like yesterday on QQ, that bounce and reversal.
Exactly.
Yeah, but if you notice at QQQ yesterday, and we'll wrap it up here in a second, there's a question that came through. So it got everybody out. But then we just retested that prior support level, and then it's like a head fake where like you could just get an opportunity to short. So if you run that weekly fib on it. So we tested 112 in previous, so rolled over.
Yeah,
someone wants to
exactly.
know, are you primarily trading options the same day getting out, or are you holding them? So the answer is both. Like right now, I'm on a swing trade on Apple, so I'm going to try to hold this into next week. But there are situations where it is just a day trade.
Mm-hmm.
But like right now, yeah, I'm in Apple. Hopefully, I got into it yesterday morning. So this is day 2. I'll probably keep it, I don't know, maybe Monday or Tuesday. Depends on the market, what happens over the weekend.
Yeah.
So I think.
Are you planning on letting go any risk from that? Are you gonna like take off some of the risk since we're down pretty heavy today?
Where's it at right now?
I think it was 105.
Yeah.
106, 106.50, 106.90 right now.
No, I'll probably wait. Because the way I structured that trade, I gave myself so much time on it.
Yeah. See, and this is where like Dan and I will differ, right? For me, even though I structured it well, I'd probably take off 50% because we've had such a sell-off today, right?
Where's that gap at?
The gap is down to 99, I think it is, or something like that. Let me check.
No, it's like 106s.
The weekly, or which one?
No, I see it. No, look, I'll probably keep that position.
Yeah, see, there's that weekly gap. It was at 108 down to 105.90 something, 106.
Yeah.
So 106.42, right? So it looks like we got really close there to fill that gap.
I don't know. We'll see. I probably won't reduce any risk on it. I mean, because I've got so much time on them.
Yeah. I get it. I know. I'm just saying that so that people know, right? There's a difference in that approach, and then also it depends on where you're at on the month, right? As well. If if you're huge up on the month, then it's like, who gives a crap, right? If this is just padding more for the month. But if it's not, and this is one of your bigger trades of the month, then you start extracting those dollars to make sure that you can keep it up.
I talk about that too. It's another good point. Is like everyone's like, well, where do you take? And this goes back to like trading books. Is like you've got to like make your risk reward this, and like where do you take profit? Like you just perfect example. Like why would I? If you're up on the month profit wise, why would you take yourself out of a trade that you're crushing it on? Like if you're not up on the month and you need the P&L to get green, obviously you're gonna take profits.
Yep.
So that makes a difference too. So all right, we're kind of out of time here.
Yeah, I gotta head out.
I appreciate you coming on, man.
Yeah, no problem. Glad I could support. Hopefully it was good for everybody, and look forward to seeing you guys crush it as well. Make some money on those markets.
For dinner. I'll give you a call after this. So,
all right, man.
Thanks for coming on, man.
Yeah, no problem. Talk to you later.
All right.
Bye.
All right, guys. Thanks for coming to Take Stock. Hopefully it was a good episode. Hopefully you guys enjoyed it. We'll be back next week. Sammy's going to be back. He's on vacation this week. Well-deserved vacation. If you guys have questions, head over to the website, stockability.com. We have a free webinar you can get into. Then there's a half-day class with Sam you can get into as well. There's also 7 free videos you can sign up for. If you go into there, you can take a look at some of these videos and get access to some of the stuff Sam's created. So thanks for sticking with us today. I know it's a little funky of a background, but we're working on the office. We'll be back next week. We'll have our students will see you in GTS. If you guys have questions, you'll see it at the website, and we'll go from there. Enjoy your weekends and trade the markets well.